Hello, everyone. April is Financial Literacy Month, so I just wanted to take a little bit of your time. I hope you'll give me a few minutes of your time to kind of listen to what I have to say with regards to financial literacy for all. Um, when I think about this topic, a scripture comes to mind, and that's a good man leaves an inheritance to his children's children. And that's from Proverbs 13:22. So, with that in mind, I think it's extremely important that we delve into the topic of generational wealth. And unfortunately, it's not something that's been talked about a whole lot in some of our Black and Brown communities. So, it's kind of I guess it came to full fruition for me about 2 years ago when I had some pretty traumatic things happen in my life. I consider myself to be a pretty smart person, but I found that there were some definite deficiencies or gaps that I had in my own financial knowledge. So I began a quest. And I began a quest of learning everything that I could. And now that and there's still a whole lot more for me to learn, but what I've learned thus far has been pretty eye opening. And I just want to take this opportunity to share some of that information with you. I've always worked in service industries, so helping people is something that I'm extremely passionate about. But to be able to help people in the ways that I'm now helping people, like helping people become homeowners, helping people learn more about how to manage their money and create generational wealth, those are things that I'm definitely passionate about. So today we're just going to delve into a few things. We're going to kind of look at the background of how we got to where we are. We're going to talk about building and maintaining good credit. We're going to talk a little bit about retirement and estate planning, as well as a little bit about insurance products. So if we look at our history as Black and Brown people, there we've definitely faced some challenges, and there's some reasons we aren't where we should be, or are our own fault because we made poor choices and we knew that we were making poor choices. But there are some other systemic factors that have led to our lack of understanding of money. And, one staggering statistic that I just heard the other day had to do with the fact that the average net worth of an African American person is $5,000 compared to $150,000 for our Caucasian counterparts. So, some of the things that have led to these disparities are systemic exclusion from financial systems dating back to the era of slavery. We all are aware of the educational disparities, the economic disadvantages, and our own mistrust of financial institutions. There's been a lack of representation, policy, um, the role that policy and regulations have played uh, come into play, as well as social and cultural factors. So, the way that this has impacted us, it's impeded our ability to accumulate wealth. It's affected our home ownership rates. It's affected the way we prepare for retirement. It's affected our ability to manage our debt. Um, and we've kind of limited ourselves to financial services. We've been vulnerable to financial scams, and it's definitely affected us from generation to generation. The lack of financial literacy in African American communities has deep and enduring impact, affecting everything from wealth accumulation to retirement preparedness. So let's talk a little bit about our money mindset. and where that comes from. So, when we think about understanding what our money mindset is, um, take a moment to like reflect on your childhood experiences. Think back to your earliest memories of money and how it was talked about in your household. Did your parents discuss financial matters openly, or was it considered taboo? Consider the role models in your life. Identify the people in your life who influence your financial beliefs and behaviors. Was it your parents, grandparents, or other relatives? What attitudes did they have towards money, and how did they handle financial decisions? Also, analyze your family's financial situation. Look at your family's financial situation growing up. Did you experience financial hardships or abundance? All of these things come into play when we consider what our money mindset is and how it was developed. You also have to like take a look at your education, evaluate what you learned about money and how this may have impacted your financial beliefs. Did you receive a formal education on financial literacy, or did you have to learn everything through experience? And for most of us, and it's something that's often talked about, but it doesn't really seem like it's changing. None of us really received any kind of formal education on financial literacy. It's we've kind of learned it from our parents or learned it through hard knocks, just making mistakes and trying to correct them and get it right the next go around. So another thing you need to do is look at your current habits. Take a closer look at your current financial habits and attitudes toward money. Are there patterns or beliefs that you've carried over from your upbringing? Are there financial behaviors you'd like to change? Seek out outside perspectives. Talk to other people, such as friends and relatives, about their own experiences with money and compare them to your own. You can also seek some professional guidance if you need help addressing any negative beliefs or behaviors you've identified. So let's talk about financial literacy and what it actually is. Financial literacy is the foundation for building a secure and prosperous future. It involves such topics as budgeting, debt management, savings, wealth building, investment, credit management, and financial protection. So, one thing we know is that bad credit is expensive. Everything that we do can be affected by a lower credit score, and it's going to cost us money. If you're renting, you're going to pay higher deposits. If you're trying to buy a home, you're going to pay higher interest rates. You're trying to buy a car, you're going to pay higher interest rates. So that's one of the things that we definitely need to get under control. So let's talk about it. Um, some of the things that you can benefit from or by having a better credit score are a financial health and peace of mind. You're going to have better career opportunities in some cases. You will be prepared for emergencies better when that credit score is under control. It gives you greater bargaining power as well. Your cell phone contracts and your security deposits, utility services, all of that will give you better benefits if your credit score is where it needs to be. It's going to be easier for you to get approval for loans and credit cards as well. So, what is your credit score looking like? Do you even know what it is? Have you taken a look at it, or are you too afraid to look because you just don't want to deal with it? Well, it's something that you've got to deal with. You need to take a look at it, and you can't just ignore it. Do you know where you rank? This chart right here kind of gives you a breakdown of the rankings for credit scores. If you're anywhere between 300 to 579, your credit score is poor. 580 to 669, your credit score is fair. Good, we're between 670 and 739. Very good is 740 to 799, and exceptional is 800 to 850. Where do you rank? So, in order to think about changing and affecting your credit score, you kind of need to know what makes up your credit score. So, your payment history makes up 35% of your credit score. The amounts that you owe make up 30% of your credit score. That your length of your credit history makes up 15% of your credit score. And then your credit mix, that's the type of credit that you have established, that makes up 10% of your score. And then any new credit that you seek to get makes up another 10%. One important factor that you need to keep in mind is that no matter what, you want to keep your credit utilization under 30%. And that's whatever your total outstanding credit balances are. You can't have um, $50,000 worth of credit and have charged $40,000. You've got to keep that number at 30%. So, what are some action steps that we can take to repair our credit? We can check our credit reports regularly. We can dispute any errors that we find. You can pay your bills on time, reduce your credit utilization ratio, which is what I was just talking about. Avoid opening any new credit lines unnecessarily. Pay down your existing debt. Consider opening a secure credit card. Become an authorized user on someone else's credit card who has good credit. That helps to build your credit score as well. Check for credit building loan products. Contact me because I can help you with this matter, and stay informed and be patient. The next subject that we want to briefly touch on is retirement and estate planning. So, just a little disclaimer: this any information that I'm sharing here regarding retirement planning is for informational purposes only. Everyone's individual financial circumstances differ and would need to be evaluated regarding proceeding with any of the products that I'm discussing here. So, ways that you can make your money work for you. Retirement explained. Early and consistent retirement planning is essential for securing a comfortable retirement, leveraging the power of compounding to grow your savings over time and managing the risks associated with longer life expectancy. Beginning the process early allows for strategic investment decisions and the development of disciplined savings habits, ensuring a reliable income stream in retirement. That's the goal. That's what we're all going for. Moreover, it offers peace of mind, reducing stress by providing financial security and the freedom to enjoy both the working years and your retirement with confidence and ease. So, there are many types of retirement savings vehicles. Most of us all know about 401ks, we know about IRAs. Maybe not as many know about annuities. Pension plans, those are kind of a thing of the past, but some companies, I believe, still do offer pension plans, or depending on when you started with your company, that may still be available to you. Real estate investments are used as retirement planning vehicles, as well as a product called an IUL. So, some of the myths about 401ks. You may have been told that you can't lose money in a 401k. Untrue. There is a medication to take. Myth two: rolling your 401k to an IRA is always the best option when changing jobs. Not necessarily. Other retirement vehicles that you might want to possibly consider are IULs and fixed index annuities. Just a little overview of the index universal life versus the 401k. One thing an index universal life policy provides is tax free loans and withdrawals. There are no required minimum distributions like a 401k. index universal life policy. It provides death benefits. It provides investment flexibility with downside protection, and there's no annual contribution limit. There are also estate planning benefits attached to index universal life products. So those are just some of the benefits of that over a 401k. Some of the benefits of a fixed index annuity account versus a 401k are that there is market downside protection, guaranteed income for life, no annual contribution limits, tax deferred growth, potential for index gains without market exposure, and flexibility for legacy planning. So, what are some action steps you can take if you're interested in learning more about any of these products? Feel free to schedule an appointment with me for a free consultation. You can call me or text me at 682 297 3170. Next, we'll want to touch a little bit on estate planning. Estate planning involves all of the following. We can talk about a trust, living will, life insurance, charity, property disposition, are just a few of the items that are involved. Um, People normally, when they hear estate planning or hear trust, they automatically assume that it's something just for wealthy people. I used to be one of those people some time ago. I now understand that that is not necessarily the case. Estate planning is the process of arranging the management and disposal of a person's estate during their life and after their death. It involves making plans for the transfer of an individual's assets and fulfilling their personal wishes in a manner that minimizes taxes, legal fees, and court costs. So, some of the key components of estate planning include your wills, your trusts, any healthcare directives, financial powers of attorney, beneficiary designations, guardianship designations, letters of intent, estate taxes, and avoiding probate. uh, what you need to do, or when you should, I guess, start your estate planning, is when you have any measurable asset base. It's something that's ongoing that will need to be updated with any major life changes. What's your action step here? This is also something that I can assist you with. I work with an attorney who provides estate planning services, wills, and trusts, and I'd be more than happy to connect you with him to get you started in this direction. So, moving on to real estate investing, which is another key way that you can attain generational wealth as provide for retirement. There are many types of real estate investment tools, um, such as purchasing properties and either fixing, flipping them, or renting them. There's land investing that you can do, real estate crowdfunding, real estate investment trusts, and investing in commercial real estate. The benefits of investing in real estate include cash flow, such as that which comes from rental properties, appreciation, leverage, tax benefits, and it's a tangible asset. Some of the risk involved with investing in real estate are that it's illiquid, meaning that it's not something that you can just go and take the money out of the bank. Um, there are management and maintenance costs associated with owning real estate. There's market variability, and then a lot of times you need upfront capital. So, what are some of the action steps you can take regarding learning more about real estate investments? You can start by educating yourself. Learn as much as you can about basic real estate concepts. Ensure that your personal finances are in order, make smart and small starts, save for a down payment for a primary residence or a small rental property, and hold on to property that you've inherited. Let me say that again. Hold on to property that you have inherited. And I'm going to say that one more time. Hold on to property that you have inherited. Make sure your credit score is in order to receive better rates, which reduces your costs. And plan and prepare for the future. Keep the property in good condition to retain its value. Take a profit from an initial investment to fund your next property. Help your family understand the value of investing in real estate and how it works. That's one I'm going to repeat again. Help your family, your children, understand the value of investing in real estate and how it works. Lastly, we're going to touch on the subject of life insurance. Why life insurance? The primary purpose of life insurance is to provide financial security to your dependents in the event of your death. It will help to cover final expenses. It can provide income replacement. It can assist you in paying off debts. It's a great tool in your estate planning toolbox and wealth transfer. I have that highlighted because I don't know that we often look at life insurance as a way to build generational wealth, but it's something that we need to consider. Um, some life insurance policies have savings components, tax advantages, and life insurance also provides a peace of mind. It alleviates the need to when someone passes that you have to, where you're running around, you got to try to do a GoFundMe account or whatever to try to get the person buried. So, at the very least, I employ everyone to have some type of final expense life insurance policy. There's several types of life insurance. There's term life, whole life, universal life, index universal life, which I touched on a little bit earlier, variable life, group life, and final expense. The ones that I have highlighted are the ones that I feel that everybody should make note of and pay special attention to. Just like I said regarding the final expense, you need that because you don't want to have to put the burden on your family of figuring out how they're going to bury you. You can get final expense insurance, I mean, very inexpensively. Index Universal Life. That's a wealth building tool. Everybody who can needs to take a look at that. Now, of course, policies like Index Universal Life and Whole Life, those are, they're going to cost more than term life, but they're permanent policies. So, when at all possible, it's always advised that you do both if you can, and you do both for different reasons. But that's something that we can get into later, should you decide to connect with me and set up a one on one personal financial evaluation. But that's pretty much it for the information that I wanted to present today. Here is my information, and I would love for you to connect with me so we can get together and talk a little bit more about how I can help you work towards making your financial future more secure. So please feel free to give me a call, text me, email me, send smoke signals, whatever, because it's my goal to help people learn what they don't know. Because if we don't know, we can't act. But once we know more, we can do better. And we can help position ourselves to be, uh, if not only more educated, but just more prepared for the future and position ourselves better financially. Thanks for listening today and have a great day.